Good morning to everyone. Our topic for today is materials procurement, use, and control. This is chapter 3 of your book, that is page 145. Um, any any company or any organization, they are required to uh, have knowledge of their procurement process and use and control of their uh, inventories or materials if it is a manufacturing company. The purpose of this is for them to uh, determine uh, whether the materials or inventory are enough to make a sale, to make a continuous sales, and for also to avoid any stock out or any loss of inventories. Again, we understand that inventories are assets and therefore we should uh, safeguard assets because it has value. Now, sa topic natin for today, uh, we will be discussing first the procurement flow of materials and then the use and control phase of materials and inventories. The focus of our discussion is mostly on a manufacturing firm kasi yung subject naman natin is focused on cost control and it is more uh, significant sa isang manufacturing firm. Okay, we need to first understand the flow of uh, transaction in procuring materials or inventory. Maybe before that, I am expecting everyone that you already have read the different forms used in the production. I mean, in the procurement phase of materials or inventories. Some of the forms used are purchase requisition forms. This is a document sent to the purchasing department and usually originates from different department, storeroom, materials record clerk, research engineering, or other departments that needs or requires materials. And then purchase order. It is an authorization signed by the purchasing agent sent to a vendor or supplier to supply goods at the agreed price, specification, terms and condition of the product, and at specified time and place of delivery. And then receiving reports. This is a document prepared by the receiving department and it shows the purchase order number, the account number to be charged, and the name of the vendor, and the details relating to transportation like FOB destination or FOB shipping point, and the quantity and type of goods received. And then we have material requisition form. This is a document authorizing the material storekeeper to deliver the materials to the requesting department. And then we also have bill of materials. This is a list of materials needed to produce a product. And most of the time, this bill of materials also includes some details of specification of the quality or other specification needed by the requesting department. Return material report. This is a document prepared when some materials requisitions were not used in the production and should be returned to the material storeroom or in the warehouse. We also have debit or credit memos. These are documents prepared when the type, the quantity, or quality of goods ordered is different from the goods shipped by the supplier to our company, and an adjustment is required to be made to the supplier's invoice. Now, let us go through the procurement flow so that we could have a better understanding of how do we account or how do we uh, record materials purchased and whose accountability would be asked whenever there are some discrepancies. So sa procurement flow, uh, the requesting department, either production department, marketing department, or other department, will prepare the purchase requisition form in duplicate. So the original one will be forwarded to the purchasing department, and then the duplicate will be forwarded to the storeroom or the warehouse. Okay? So each department, hindi dalawa silang tatlo, kundi each department will prepare a duplicate purchase requisition form. The original will be forwarded to the purchasing department, and the uh, duplicate copy will be forwarded to the storeroom or warehouse. This is to inform the purchasing department that they have a need of a material or any inventories. And then the purchasing department holding the purchase requisition form will prepare a purchase order. The purchase order are normally prepared in quadruple. The original one will be forwarded to the supplier. The duplicate copy will be one duplicate copy will be retained to him, and then the other duplicate will be forwarded to the storeroom, who is also holding a purchase requisition form, and then the other copy will be forwarded to the receiving department. And then the receiving department holding a purchase order form will wait for the supplier to deliver the goods ordered to him through the same purchase order form. And then, of course, a supplier, if he has the materials needed according to his, and uh, according to its specification, he could comply, then he will deliver the goods to the company or to the organization. Now, when he transfer the goods to the company, it must be brought to the receiving department first, together with the invoice of the supplier. So the goods and the invoice will be brought to the receiving department, and then the receiving department will unpack the goods and check whether the goods is in compliance with the purchase order form, and if it is compliant, the receiving department will now prepare a receiving report. Again, the receiving report is in quadruple copies. The original one will be retained by the receiving department. while the other copies will be distributed to different department. The duplicate copy, one of the duplicate copy will be forwarded to the storeroom together with the goods already received. Now the two remaining copies together with the invoice of the supplier will be forwarded to the purchasing department. Now both the warehouse and the purchasing department now have three documents on their hands, and that is the purchase requisition form, the purchase order form, and the receiving report form. So as you can see, kumpleto yung kanyang mga documents from the request to order and up to receiving. And that is uh, a hint for both departments that the procurement of the goods or the materials are already completed kapag hawak na niya yung receiving report. It gives him the signal that the goods are already received according to, and it is according to the specification as requested. So the purchasing department now have uh, 5 documents at hand: the original purchase requisition form, the purchase order form, and then 2 copies of receiving report and the invoice from the supplier. Now the purchasing department will forward to the accounting department the copy of the receiving report, the purchase order form, and then the original invoice of the supplier. Now the accounting department will now check whether the orders were actually received and was actually billed by the supplier. If everything is in accordance, lahat nung info in the purchase order form are already in the receiving report and in invoice, the accounting department will now prepare a disbursement voucher based on the information uh, included in the order form, receiving report, and invoice. Now, the disbursement voucher will be forwarded to the Treasury Department for payment. Now, the Treasury Department will sort out the disbursement voucher into unpaid and paid vouchers. Of course, the unpaid vouchers, uh, they will prepare a check for it to be paid. And then kapag ka meron ng cheque and the supplier already pick up the check from the Treasury Department, they will mark the disbursement voucher as a paid disbursement voucher. And that mark or stamp disbursement voucher as paid will be forwarded to the accounting department for them to record the payment of supply, the payment of the supply purchased. Okay, next. This is the storage and use of material flow. Yung storeroom natin who holds 3 documents, that is the requisition form, order form, and receiving report, na dapat pare-parehas yung laman niya in terms of quality of the materials being requested and quantity, will now prepare a what we call material ledger card or simply stock cards. The information that will be included in the stock cards will come from these 3 documents: the quantity and the unit cost of that material. And so, when the goods are already in the warehouse, the requesting department uh, that originally request for the purchase of that goods will now request for the release of that goods to be used in their respective department. And there and the form to be used to request for the release of that goods are what we call material requisition form. So when the material requisition form reaches the storeroom or warehouse, the warehouseman will prepare the goods and deliver it to the requesting department. And after delivery, he must also update the stock cards para meron siyang hint or clue na meron ng nabawas doon sa para ma-update yung record nung particular inventory na yun or nung goods na yun. Now, sometimes, the requesting department may also forward what we call bill of materials. This bill of materials contains some specifications of what kind or quality of goods or materials they need for them to be used in their respective department. That will help the warehouseman to check whether the received uh, goods are actually in accordance with the specification. Okay. Next is material control. The material control is a very important aspect of uh, materials handling. And one of the objectives of material controls are the following: to allow uninterrupted production, because if we are producing goods and we need to meet deadlines for the delivery of that particular goods, the materials that we needed should be provided to the production department smoothly in a continuous manner. Or else, if there will be no materials to be used, how can we produce the product? So we must avoid interruptions of production and, of course, delay, because any interruptions or delay may cause a substantial loss to the company. So, uh, this is about uh, proper determination of timing. So, we must have material control for us to uh, control the timing of availability and delivery of the materials being needed for production. And then another objective is to have the required quality of materials. Uh, of course, whenever we need to produce something, uh, we all wanted to have quality materials so that our goods or finished product uh, we also be a good one or with quality. So for us to be able to achieve a quality finished product, we must have a control over our materials to for us to uh, be able to have the right quality of materials. And then, of course, to minimize wastage, spoilage, and defective goods, because of course this wastage, spoilage, and defective goods just adds to our expenses. Kaya we must avoid or minimize this wastage, spoilage, and defective goods. And then another objective of material control is for us to determine responsibility on different stages of uh, material flow or material handling. Like for example, in purchasing, for storage, for issuance, we must assign appropriate person for us to know who is responsible for this particular function. And then maintain cost of materials at a minimum and maximum level. Since materials or inventories have value that whenever we stock or we overstock these materials or inventory, we are also overstocking our investment on that materials or inventories. Kapag ka naman na understock, we are missing sales, and therefore it's not also good to our company. So for us to control this overstocking or understocking, we must have a material control, and that is maintaining the cost of materials at the minimum and maximum level. And that is determining the right quantity to hold, ilan ba dapat yung nasa warehouse natin na hindi sobra at hindi rin naman kulang. And then purchase materials at a minimum price. That is to determine the right price for our inventories and materials. And then to provide information to the company. Of course, if we wanted to have quality materials and inventory, we must also determine the right source or the right suppliers for our materials and inventories. Okay, let's move on to our control procedure. Paano ba natin i-control yung ating inventories and materials? We can, we first should understand what is order cycling or the cycle of ordering materials and up to receiving them and filling it up in our warehouse. So what is order cycling method? The periodic cycle of reviewing the materials on hand and placing an order to maintain the desired level of inventory. ABC analysis is also a control procedure where you categorize your inventory based on its value so that you could determine the time it needs to reorder and the difficulty of acquisition and storage. Meaning, some materials are categorized as very important or high value or bulky, mga ganon. So, lalagyan mo siya ng category, alin yung fast moving or slow moving or small items or big items for you to know kung alin yung o kailan dapat siyang orderin kasi alam mo kung alin dyan yung fast moving, alin yung slow moving. And then we can also use two bin system. That is, you will be using two storage bins. Yung isang bin that will be used for operation and the other bin is for backup. Meaning, pag ubos na yung isa, that is a sign to you or a signal for you to make an order, to place an order kasi gagamitin niya na yung backup. So by the time na mauubos na yung backup, nandyan na yung delivery mo, meron ka nang magagamit uli for operation, and that is two bin system. Or you can use also minimum and maximum system. This is a method where the company sets a minimum level of inventory as the reorder point, while the maximum level is the limit of the inventory on hand. Meaning, magsiset ka kung ilang piraso yung minimum na ng inventory mo o ng materials mo for you to place an order. Level is the maximum amount of inventory that you should hold. Beyond that level, hindi ka pwedeng mag-hold more than that kasi hindi na kaya ng storage mo or it may cause overstocking. Kaya you have a maximum limit of inventory on hand. Or if you're using an application or software for your inventory to control them, you may also use automatic order system. That is, the program has a certain predetermined reorder point. Kapag nare-reach na yung reorder point na yon or limit na yun or units na yon, it will give you a signal that you need to order already. Okay, another aspect of material control, which is physical and the investment on materials. When we say physical, some inventories are expensive or with high value, or some inventories or materials are sophisticated. So you must have a limit on the access to materials kasi baka mamaya, like for example, kung yan ay mga jewelries or diamonds, very susceptible yan for theft. Or kung yan naman ay perishable or medyo sophisticated na kapag ka exposed sa any uh, elements, it might deteriorate or mag-evaporate siya. So you must have limitation on the access to materials. And then proper segregation of duties and responsibilities, yung kaninang procurement flow, use and control flow natin, you must have a proper segregation of that. And then, of course, accuracy of recording. In terms of control of investment naman, as I have mentioned, yung ating materials and inventories, it has value. So, kapag you're holding too much inventory, you are holding too much value also. And if it is very expensive, medyo malaki yung investment mo for that materials. And if it is not fast moving, hindi madaling mabenta, nakatenga yung investment mo sa materials mo. So you must also have control over the investment of your materials. Plus there are also cost of carrying them. Kasi kung yan ay sophisticated, it may require some warehouse. That the warehouse also requires some specification like yung kanyang temperature. So that will add to your investment in materials. Okay, so for us to control our investment in materials, we need to first understand the order point, because that order point will tell you when to order and how much to be ordered. And the formula for the order point is usage times lead time plus the safety stock, where the lead time refers to the estimated time in days to place an order of materials up to its receipt, while the safety stock refers to the estimated quantity of materials maintained to avoid running out of stock, and that is maximum daily usage minus average daily usage times the lead times in days. Okay, so here's an example of computation of safety stocks. B Corporation sells toys on average days of about 10 units, but during weekends they can sell as many as 18 units. As for lead times, their usual lead time is 20 days. How many units should be maintained as a safety stock? So based on our formula, we just have to deduct the average days sales in terms of units to the maximum sales in units, that is 18, and then multiply it by the lead time, that is 20 days. 20 days. So therefore, our answer for safety stock is 160 units, meaning we must have at least 160 units while waiting for our delivery to come para hindi tayo maubusan ng stocks, ng sales, para hindi tayo mawalan ng sales. Okay, how about the reorder point? Kailan tayo o-order? Assuming that daily usage of materials is 25 units, the company's estimated uh, lead time is about 6 days, and the company maintains materials on hand of 100 units. The 100 units is serve as your safety stocks. So when are we going to place an order? So our formula for the order point is the daily usage times the lead time plus the safety stocks. So the answer is 250 units. So if our materials will reach 250 units, we must place an order already. Okay, in this example, we will compute for normal maximum inventory and absolute maximum inventory. Jameson Incorporation has obtained the following costs and data pertaining to materials A. The normal use is 5,000. The maximum use per day is 6,000. The minimum use is 2,000. The lead time is 5 days. And the numbers of units for every order is 5,000. That's order quantity. Okay, let's compute for the safety stock. Uh, in our formula, maximum daily usage minus the average times the lead time, that is 5,000 units. The reorder point is lead time times the normal usage plus the safety stock, therefore 30,000 units. So if our inventory reaches 30,000, we must place an order. Now, the normal maximum inventory, the formula is order point minus the normal usage during lead time plus the quantity order. So our order point is 30,000. Our normal usage is 5,000 units times the lead time of 5 days. So we have 25,000. So deducting this and adding the quantity order, we have 10,000 units. Ano ibig sabihin ng normal maximum inventory? That's the maximum number of inventories on hand. On a particular day, we have a maximum number of inventories of 10,000 on a particular day. Now, the absolute maximum inventory is computed as follows: order point minus minimum use times the lead time plus the order quantity. So 30 minus 10 plus 5,000 is 25,000. This absolute maximum inventory is the maximum inventory uh, during, with an assumption that our daily usage is at a minimum. So dito sa normal, this is our normal usage. We will be holding about 10,000 units. Ngayon, kung hindi naman normal yung ating inventory or yung usage, uh, the maximum inventory that we should hold is at least 25,000 units, with the assumption that the usage of materials is at a minimum only. Okay, next is EOQ, or Economic Order Quantity. EOQ will tell you how many units to be ordered at the most economical cost. Pinakamura na uh, cost ng inventory. At the same time, it will give you the number of units to be ordered. And the formula is square root of 2 times Q times O over C, where Q is the desired annual quantity in units, O is the cost per order, and C is the carrying cost per order. Yung cost per order is the cost of placing an order. Like for example, if you have to pay for the telephone calls to the supplier, that's the cost per order. Or uh, if you have to pay some agent, that's the cost per order. Carrying cost also a cost of what we call handling cost. Whenever we hold inventory, we have to pay something. Like for example, yung warehouse, if we maintain say 10,000 units of materials and we need to put them in the warehouse, we have to pay, or we will be incurring cost of carrying them, and that is called carrying cost per order. Okay, let's have an example of computing EOQ. The company is engaged in the sale of toys. The cost per order is 1,000 and its carrying cost is 25 pesos per unit. The company has demand of 50,000 units per year. So we are requested to compute for how many units are we going to order and how many times are we going to order. And that is EOQ, the number of times we have to order, the cost of ordering the units, and how many inventories on the average are we holding in a particular year, and how much the carrying cost. So using the formula of EOQ, we will arrive at 2,000 units. So if we are in need of 50,000 units for 1 year, and for every order we will only order 2,000 units, how many times are we going to order in a particular year? And that is 50,000 times 2,000. In a year, we will be placing 25 orders. And whenever we make an order, we have to pay a particular cost, and that is the ordering cost, and that is 1,000 peso. So in a year, we will be incurring 25,000 pesos for the ordering cost. Now, for the average inventory, that is the beginning inventory plus the ending, divide by 2. So if we have 0 beginning and we ordered 2,000, and then we do it for 25 times, so we are holding 0 to 2,000 inventories. So 0 plus 2,000, that's 2,000 divided by 2. We are holding in average 1,000 units for the entire year. So for every units we are carrying, we are paying 25 pesos for each unit. So we are uh, spending 25,000 total carrying cost. So as you can see at EOQ, the ordering cost and the carrying cost are equal. Okay, let me just show you another example. Okay, say our annual demand is still 550,000, and we wanted to know whether the uh, cost of carrying and ordering are at the lowest at EOQ. Uh, we will compare different sizes of ordering our annual demand. Say for example, the order size instead of 2,000 units, as we have computed using the EOQ, we will use 400 units. So if for every order we will be ordering 400 units only, we will be incurring 125 times of orders in a particular year. So in the for every order we will pay 1,000. That is equivalent to 125,000. Okay. Now for the carrying cost, our formula is average inventory times the carrying cost. So if our order size is 400, you just simply divide it by 2, that's 200. So in average, we are carrying 200 units in a year. And that is 200 times 25 pesos per unit. We are incurring 5,000 pesos carrying cost. So kung mapapansin mo, habang uh, kaunti yung average inventory natin, bumababa din yung carrying cost natin. Kasi konti lang naman yung inventory na kini-carry natin. So we have a lower carrying cost. But of course, pag konti lang yung ino-order mo, mas maraming beses kang order, tataas yung ordering cost mo. So the total cost is total ordering cost plus total carrying cost. We will be incurring 130,000, and that is too far from our computed cost using the EOQ of 50,000. So changing the number of size per order from 1,000, 1 to 50, or making it higher than 2,000 to 5, 5,000, and 10,000 will result to a different total cost. And uh, comparing the different total cost, the least cost is at EOQ, which is 50,000. That is, the ordering cost is equals to the carrying cost. Next is system of accounting for inventories. This is periodic and perpetual inventory system. I'm expecting you already have some ideas about this during your basic accounting. So periodic system does not keep real-time record of inventory in stock or goods sold to customers, while perpetual inventory continuously updates the balance of its inventory by maintaining an inventory ledger card, or what we call stock cards. Okay, for comparison, uh, some journal entries for purchase of materials, comparing periodic and perpetual. For perpetual, it uses the material inventory account directly. Unlike in periodic, uh, it uses the purchase account. Okay. For payment of freight under periodic, it uses freight in account, while sa perpetual directly to inventory. For return, periodic uses purchase, return, and allowances. For perpetual, it uses inventory directly. Okay, for paid materials inventory with discount, the discount uh, is deducted to inventory under perpetual, while in periodic it uses purchase discount account. Now, for issuance of materials to work in process, no entry for periodic. For perpetual, we use the normal entry that we have learned. From transferred from work in process to finished goods, and then sales of finished goods, no entries for periodic, while the normal entries that we have learned for perpetual. And then for the return, uh, since the perpetual inventory system uses a corollary entry, we just have to reverse the corollary entry of debit finished goods and then credit cost of goods sold. No entry for periodic regarding inventories, but of course the return should be recorded as debit to sales return and then credit to receivables. And then inventory costing method, we have actually three only, but uh, in our book, uh, they also introduced LIFO, or last in, first out. First is first in, first out. The materials first purchased should be the first to be issued to production. Weighted average is the average unit price computed each time a purchase of materials is made, and the new unit price is used to determine the cost of materials issued to the production. Last in, first out, or LIFO, the materials last purchased should be the first to be issued to production. And then we have specific identification. That is, cost is assigned on a particular product. Okay, let's go to the example. Okay, first in, first out. Say this is our stock cards of a particular materials or inventory. On January 1, we have our beginning balance of 200 units at 100 peso. So the total cost is 20,000 pesos. And then on January 5, we purchased 50 units at 120 pesos each. So that's a total cost of 6,000. So in our balance column, we should not combine the two inventories or materials. we still have to separate 250 because they have a different price. 200 at 100 and 50 at 120. But all in all, we have a 26,000 worth of materials and inventory in our stock cards. And then on January 7, we issued 80 units to our production. Uh, since we are using first in, first out, the first materials that were transferred in should be the first to be uh, sent out. Kaya yung cost ng 80 is not 120, will come from the first 200, and that is 100 pesos. So the total cost of the issued materials is 8,000. So the 80 units will be deducted to 200, and that will leave us 120 units at 100 pesos. The 50 units will still not be used. So, kumpleto pa siya at 120 pesos. And then say on January 15, we bought another 500 units at 90 pesos. We have to account it also separately. So all in all, we have three kinds of materials or inventory in our stock cards. 120 at 100, 50 at 120, and 500 at 90. And then for example, we have an issuance of 120, 50, and 30 for a total of uh, 600 units. So how are we going to use or uh, account for this issuance? Yung 600 na yun, we have to exhaust first all the materials that were transferred in first, and that is yung 120. So 120 at 100. Yung next 50 from the 600 will come from the 120. So meron na tayong 170 na exhaust. Since 600 yung kailangan sa production, we still have to get 430, and that's 430 will now come from the 90. So we are following the first in and first out scheme. Okay, now, for example, in January 22, an issuance was returned from the production back to the warehouse. And this issuance comes from the issuance from the January 7 transaction. So kung babalik yan at 100, kung magkano yung ginamit nating cost doon, yun ang gagamitin din natin to record the return of the goods to the warehouse, and that is 100 pesos. So dalawa na uli yung ating materials inside our stores. That is 15 at 100, 70 at 90. So yung 15, nauna yung pumasok sa atin. Galing yan dun sa first 200. Right? Okay. So we have purchased 300 and 300 at 110. So all in all, we have 40,800 worth of materials inside in our stock cards. 385 units yon. Yung 15 ay taga 100, yung 70 at 90, and then yung 300 at 110. The total cost of issuance to production is 63,200. The total purchases is 84,000. Now let's compute for the ending inventory under perpetual and periodic system using FIFO. So dahil first in, first out, our number of inventories in our warehouse is 385. Sa 385 na yan, Yung 300 doon, 110, because that is the last inventory that was transferred in. So, nandyan pa yan sa stock cards natin, nasa warehouse pa natin. 70 at 90, and then 15 at 100, 40,800. Under periodic, wala siyang stock cards, but when he do physical counting, makikita niyang nasa warehouse natin yung 300 ng tagwa 110, 70 na tagna 90, and then 15 na tagwa 100. Okay, so under FIFO, the ending inventory under perpetual and periodic is the same, as well as the cost of materials issued is the same. Using FIFO costing inventory method. Okay, using LIFO, okay, ito naman, last in, first out, the last materials that was transferred in should be the first one to be transferred out. So 200 ang beginning natin, 20,000. May pumasok na 50, so dalawa na, 250, 200 at 100, 50 at 120. So if there's a requisitions from the production, say 80 units, ang una mong ilalabas yung last na pumasok, which is 50 at 120. Okay, since 80 yung kailangan niya, kulang pa ng 30, yung 30 ibabawas na natin dun sa last, which is the first pala, which is 200 at 100. So matitira na lang dun sa tagwa 100 units o 100 pesos, that 200 units is 170. Okay, we purchase 500, 500 at 90. That's the last in. So if there's a request of 600 units, yung unang 500 doon kukunin sa tag na 90. Yung 100 sa tagwa 100. So 170 minus 100, we have still 70 units at 100. And then kung may return, and since this return pertains to January 7, ito yon. Since we are also using last in, first out, yung last na dinala sa production is tagwa 100, yan din yung bumalik sa atin at tagwa 100. So we have now two kinds of inventory, 15 at 100 and 70 at 100. Okay. And then purchase of 300, we already have 385 units. Yung 15 at 100, 70 at 100, and 300 at 110. Okay. Computing the ending inventory, this time magkaiba na sila kapag last in, first out yung ginamit natin. Under perpetual, based on our stock cards, we still have 385 units, and that is 41,500 cost. Itong perpetual, ito yung nasa stock cards natin, this one. But under periodic, since we don't maintain records, and what are we going to do is physical count. Pagpunta niya sa warehouse, ang makikita niya doon is actually not the 300, not the 110, 100, and 100 cost, kung hindi yung tagto 200, yung 200 is tagwa 100, yung 50 is tagwa 120, and yung 135 na tag na 90. Saan ang galing itong cost na ito? At bakit iba siya sa perpetual? Okay. Under periodic system, we don't maintain any stock cards. So we have a beginning of 200 and we have a purchase of a total of 850. Now we have an issuance of 665. Doon sa 665 na na-issue, ang una mong ilalabas dyan, yung tagwa 110. And then, kulang pa yan, 665 yun, so meron pa tayong 335 na ilalabas doon na sa tagna 90. Okay, so meron pang matitira dito kasi 335 lang yon. 665 minus 600, 300, meron ka pang 365 dito na kukunin sa 500 units. So pag pinuntahan mo yan sa warehouse, ang makikita mo lang tagna 90, taga 120, at taga 100. Okay, 200 at 100, 50 at 120, and ano yun, 135 at 90. Ito yon. Okay? Kasi wala tayong mini-maintain na stock cards. So, since there is a difference now in the amount of ending inventory, magkakaroon na rin siya ng difference in amount of materials issued. Kasi yung ending balance of our materials have different amount. Okay, let's go to weighted average. So sa weighted, ang gagawin mo lang, you just have to average the unit cost. So for example, we have a beginning of 200, we have a purchase of 50 units. So all in all, meron tayong 250 units. That 250 units, ang total cost niyan is 26,000. That is 20,000 plus 6,000, 26,000. So for us to get the average unit cost, you just have to divide 26,000 divided by 250 units. Okay, so after determining the average unit cost, that average unit cost will now be used to compute for the issuance of materials to the production. So 80 units at 104, 8,320. So 250 minus 80, that's 170 at 104. Then we have new purchase, 500 units at 90. So 500 plus 170, we have 670 units. 17,680 plus 45,000, we have 62,679. So to get the average, ganun uli, just divide the total cost to the number of units, 93.55. Okay, do the same process hanggang sa mag-arrive tayo sa final number of units, which is 385 units at 106.77. So using perpetual and periodic, using perpetual, we already know 106.77 per unit times 385, we have 41,106. Sa periodic, since again walang stock cards, ang mangyayari doon, yung beginning mo plus lahat ng pinamili mo, you have to add it up, and then yan ang gagamitin mong denominator sa total cost ng purchases mo plus the beginning. and that is 99.05 unit cost. Since we have an ending inventory of 385 units, ang gagawin mong unit cost is 99 o gagamitin mong unit cost is 99.05. So magkakaroon tayo ng difference in terms of amount. But of course, in terms of number of units, parehas. Kaya lang yung unit cost magkaiba kasi walang stock cards yung periodic. He computed it based on total. Okay, so since magkaiba na rin yung kanyang cost of materials issued. And then, specific identification, since alam mo kung anong materials, specified ko anong materials yung nasa ending inventory mo. Say, for this example, the remaining 385 materials came from the units purchased on January 15. And yung January 15 cost nun is 90 pesos. Let me just show it to you. Ayan, 50 at 90 pesos. At dahil specific siya, yun daw yung merong natira. So under periodic and perpetual, we have the same amount of ending inventory. And therefore, we have the same amount of materials issued. Okay, let me go back to this. Valuation of inventory under PAS2, paragraph 2, state that inventory shall be measured at lower of cost or net realizable value. NRV is the estimated selling price in the ordinary course of business less the estimated cost of completion and the estimated cost of necessary to make the sale. In short, if everything is normal, NRV and cost should be equal because NRV is selling price minus all the cost related to completion and related to making the sale. Ang may iwan sa iyo yung unit cost if everything is equal. But if there is a difference dun sa cost versus dun sa resulting amount ng net realizable value, ang kukunin daw natin na basis of recording our inventory is the lowest amount between cost and net realizable value. Now we have here some note. If materials are materials and other supplies held for use in the productions are not written down below cost, if the finished goods in which they will be incorporated are expected to be sold at or above cost. I mean, not written down below cost. Yung daw materials natin, normally it's not written down below cost. If the finished goods in which they will be incorporated are expected to be sold sold at or above cost. Kung walang magiging changes doon sa selling price ng ating finished goods, then we don't write down the cost of materials. However, when there's a decline in price of materials, that indicates that the cost of the finished goods exceeds its net realizable value, the materials are written down to net realizable value. Okay, let's do the accounting for NRV or writing down of inventory. If cost is less than NRV, the inventory will be carried at cost and there will be no accounting problem because the inventory is already at cost. So therefore, there is no problem of recording any difference since the inventory is already at cost. The increase in the value is not recognized. But if the cost is greater than the net realizable value, the inventory will be carried at its net realizable value, and the accounting problem will arise to account for the accounting of the decrease in the value of inventory. Again, according to our PAS 2, we have to record or account our inventory uh, at lower of cost or net realizable value. In short, whichever is lower. So if NRV is lower than the cost, we have to record it at NRV. And therefore, our inventory must be written down. So we have two methods of writing down inventory, direct and allowance method. Using direct method, each material ledger is adjusted at the lower of cost or net realizable value. The ledger cards are then added up to determine the new valuations of materials. The difference between the cost of inventory and its net realizable value is known as loss on inventory write-down. This method results in an increase in the cost of goods sold for the difference of net realizable value and the amount of cost, and the loss of inventory write-down is not presented as a separate item in the income statement but instead included in the cost of goods sold. So under direct method, uh, we will not be recognizing any loss on inventory separately, but instead we have to decrease the amount of our inventories, and in effect it will increase the amount of the cost of goods sold. Unlike in allowance method, each material is recorded at cost and any loss on inventory write-down is accounted separately. So meaning we have to recognize a loss on inventory write-down that is debited for the amount of decrease in inventory to its net realizable value, and an allowance of inventory write-down account is credited. So in the subsequent years, the allowance for inventory write-down shall be adjusted upward or downward depending on the difference between the cost and net realizable value in inventory at year end. Okay, let's go to the example. Okay, say for example, we have here materials inventory record as of December 31. We have materials 1 to 5, the number of units, the unit cost, and the NRV per unit. Work in process A and B, number of units, the unit cost, and the NRV. Finished goods, number of units, cost, and NRV. And then other information, assume the company's total purchases is 1 million, total labor cost is 300,000, factory overhead is 400, and the beginning inventory has the following data: material work in process, and finished good cost versus NRV. So we are required to compute the lower of cost or NRV as of December 31, 2020 and the cost of goods sold statement using direct and allowance method. Okay, kapag gumagawa tayo ng comparison between cost and NRV, we have to do it on a per item basis. Kaya sa materials, material 1, hindi natin siya ito total, but we have to compare each material. So for material 1, if the cost is 28 and NRV is 30, the lowest between the two is of course cost, kaya 22,400. We will choose 22,400 versus 24. So the lower is 22,400. For material 2, 14 versus 12,800, of course 12,800. For 3, material 3 is 18 versus 18,600, 18. And then material 4 is 25 and 36. So total is 114,200. So based on books, we have 117,900 cost, but applying NRV rule versus cost, we have to write it down to 114,200. Okay, so the same process, work in process per item, 50 and 80. Finished goods, 61 and 108. So yung total, 428 yung total cost, and yet 413 lang yung dapat na naka-record comparing NRV and cost. Okay, so in short, we have to write down. Now, magkano yung i-write down natin? The total cost is 428. The lower of cost or NRV is 413. So the difference between the two is 15,200. But since we have a beginning balance of our materials, work in process and finished goods, we have to also compare lower of cost and NRV for the beginning inventories para ma-identify natin magkano lang yung for the entire year, and that is 9,000. How did we get 9,000? Comparing the two, cost versus NRV, get the lower 1,541. So the difference between the two is 9,000. That's the beginning balance of inventory write-down. So in short, for this year, the increase in the write-down is only 6,500. So again, we have to record the inventories at their lower of cost or NRV. So for materials inventory, instead of 117, they must be recognized at 114,200. So if this is the ending inventory cost, ang entry natin for ending inventory is debit inventory, credit income summary. So debit materials inventory at lower of cost or NRV, work in process 130, finished goods at 169, credit income summary 413,400. Okay, so yung ending inventory natin na write down na natin directly at 413,400. This one. Okay, let me just show you saan nanggaling yung mga amount. 114, 114. The lower. 130, 130, 169, 169. Okay, let's prepare the cost of goods sold. Beginning is given, purchases is given, total, materials end at lower of cost or NRV. Okay? So, lahat ng mga ending inventory natin, lower of cost or NRV. So, our cost of goods sold is 2,827,600. Now, let's compare it to allowance method. Sa allowance method, the difference is just the recognition of an allowance for inventory write-down. And then yung entry natin for inventory, instead of lower of cost or LRV, we will still be using their original cost. Okay, 117,900 is the original cost of materials. Work in process is 140, finished goods is 171. Okay? Ito yung kakaiba sa kanya sa allowance method. We have this account, debit, loss on inventory write-down, credit, allowance for inventory write-down. The allowance for inventory write-down is a contra asset presented in the balance sheet as a deduction to our total inventories. So pag tinotal mo yan, minus ito, you will still arrive at the lower of cost or NRV. Now, the loss on inventory write-down of 6,500 will be added to the cost of goods sold. Okay? To arrive at the cost of goods sold after inventory write-down. Now, the amount used for all the ending inventories here are their original cost. Okay, let's move on. Cost of inventory. The cost of inventories should include all costs of purchases, net of trade discount, but including taxes, freight and handling costs, cost of conversion, that is labor and overhead, and other costs incurred to bring the inventories to their present location and condition. However, it exclude the following: abnormal amounts of wasted materials, labor, and overhead. I think we already discussed this in our discussion in process costing, that all abnormal amounts are recognized as expense. Storage cost of finished goods. However, storage cost of goods in process are part of the inventory. Admin cost and selling cost are not part of inventory cost. Other guidelines in counting of inventory: materials in transit purchased FOB shipping point included. If it is destination, excluded. But finished goods transferred out or sold FOB destination is included, while FOB shipping point is excluded. Finished goods out on consignment are included in our count, while goods accepted as a consignment are excluded from our count. Trade and cash discount. Trade discount is not recorded or recognized, and therefore there is no entry for trade discount. But what is trade discount? These are the discount given to encourage more sales. and that is a reduction in the list price or in the catalog price. While cash discount is given to attract early payment. And cash discount is recognized in our accounting books and recorded as purchase discount if you're the buyer and sales discount if you're the seller. So we have two methods of recognizing purchase discount, cash discount, uh, gross method and net method. So upon purchase, if you're using gross method, the amount of accounts payable and materials are recorded at gross amount. While on net method, you will deduct the amount of discount and record the accounts payable and materials at net amount. Upon payment, if it is within the discount period, uh, under net method, since netted agad siya, you don't have any problem at all kasi yung accounts payable na i-debit mo is the same amount since tinanggal mo na yung discount mo. Unlike in gross method, you will recognize purchase discount or if you're using perpetual inventory system, credit to materials. If you pay beyond discount period, then ang discount na recognize kasi you pay beyond the discount period. So you pay the gross amount. However, in the net method, since you already deducted the discount and yet you were unable to avail it, magkakaroon ka ng additional cash to pay, kaya yung payable mo is lower than your cash payment and the difference is called purchase loss or is an expense. Okay, thank you very much.